ViacomCBS shares taking a hit Thursday morning following its Q3 earnings report. The media company posting adjusted earnings of 76 cents per share on revenue of $6.6 billion. Both top and bottom lines beat analyst estimates for Q3. ViacomCBS also reporting that it added 4.3 million global streaming subscribers, which brought the total to nearly 47 million. Joining me to discuss is Variety Intelligence Platform Senior Media Analyst Gavin Bridge. Gavin, let's start here with the big picture when it comes to streaming growth. So we saw pretty decent numbers and they were basically in line with consensus estimates. What was your take on what we got this morning?
Well, the subscription streaming side of things is definitely showing decent growth, and actually was interesting because if you think about the start of the NFL season, that typically sees a boost for subscriptions across many different formats. With CBS offering NFL on Paramount Plus just in the US, it didn't really rise a lot. You know, like you'll see bumps in other things like say like Fubo, VMVPDs, people who offer the service, there's a seasonal spin. And it to me suggests that like the reliance on sports or the focus on sports may not be as strong as was hoped. For overall paid streaming, though, I mean, an extra 4 million is pretty good going. Their total number is what, like you said, 47 million or so global subscribers. On the other side, what I think is a concern is the free streaming stuff, right? Pluto is really their free streaming model. And we're seeing, I wouldn't say it's stalling, but they added 2.1 million MAUs, monthly average users globally this quarter, which is the lowest amount since Q1 2020. So as they're actually opening up in more territories and growth is going down, it may suggest that that market is kind of peaking out. And they've had a lot of hopes for ad revenues coming from there. So I think it's an important thing to just stay in mind.
Okay, so let's talk a little bit about strategy because we got a pretty big announcement this morning that T-Mobile is now going to be giving its eligible customers the ad-supported version of Paramount Plus for free for 12 months. Now, this is only one aspect, right, of its streaming strategy. The company also recently was selling non-core assets to grow its cash pile. As of Q3, that cash pile was $4.8 billion. And all of that money is essentially going to be going to content. Do you think that these strategic moves are really for long-term growth, or what's your opinion on all of this?
Yeah, I mean, if you look at the cash pile bit first, I mean, they did say that not all the cash is going to streaming, right? Some of it's going to go to linear and then it will go into streaming. So ultimately everything will go into streaming, but some of it will be linear focused first. The interesting thing for me with the cash pile is it's not sustainable. This cash didn't come about through profits. It came about through selling off assets. Once they run out of things to sell, they can't really, raise that capital again. So as long as it's spent wisely, with regards to some of their content, some of it's being spent to sort of fill the holes that they shot themselves in the foot with, to put it mildly. Like there's this new South Park movie deal that has been made because they don't have South Park on Paramount Plus. They've got a Yellowstone prequel, Yellowstone being the biggest cable show out there, because they don't have Yellowstone rights to Paramount Plus because they sold them off to other streamers. So some of it is almost like you've got to spend, they have to spend to sort of stay at the same place, if that makes sense, because they've lost some content. Then with regards to the T-Mobile deal, I think it's a smart move. T-Mobile has it looks like it's growing. It's definitely aggressively trying to grow in the US, so you can reach a large number of subscribers or potential subscribers there. See, the hope will be that some of them either upscale to the paid version without ads for, was it like $9.99 a month? Or once that deal ends, they keep subscribing. But it's also a smart deal. If they're given the ad version, they're really trying to make money through ads, right? Like, because that's the core of ViacomCBS business. And by making it available to 20, 30 million people, even if 3 million pick it up, that will really help their growth and their footprint for when talking to advertisers.
So one thing that we heard a lot about on the ViacomCBS call is CEO Bob Bakish talking a lot about the international growth opportunity, right? We hear that from a lot of different streaming services that the international growth is going to be such a big catalyst, such a bull case for investing in these companies. Now, do you think that this opportunity is really as big as it's being promoted?
No. To put it simply. I think they're doing a smart move with some of the plans that they've done, like buying the Fox Hispanic networks this week. Overseas was a good move to help bolster the content offerings that they have in these spaces. But you're still, I feel like international is just this mysterious void that they keep saying because it's an intangible. And yes, there is potential, but you still have to spend a great deal of money. Like if you're looking to be the next Netflix is international because it spends a fortune. And if you haven't got that fortune to spend, it may be difficult. Now, I think someone like ViacomCBS may be focusing on a couple of key markets. So Latin America, we know that they've got that new Showtime deal with Comcast, Sky in Europe and the UK for to try and increase distribution there. So there is potential, but you also have to remember, like, each market's different. Some markets are not mature for streaming yet, so it may be a case too soon to be, putting all your eggs in the international streaming basket.
Thanks, Gavin, for taking the time and providing such insightful analysis on ViacomCBS, as always. And for more in-depth analysis on ViacomCBS and the rest of the media sector, head over to variety.com/VIP.